Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm really excited to join you today on this Friday, February 11th. Got five very, very interesting charts I want to show you today. I believe we are in the midst of a cyclical bear market. I'm going to kind of make a little bit of a case for it and show you some things to watch. Before I get into any of that, though, I do want to just make you aware, if you go over to earningsbeats.com, and scroll just down a little bit, we have a February educational series that actually I started because of the weakness that we saw in January. We were already very cautious heading into January, and then January hit, and there were some things I really wanted to get out to our members. If you click on that, it'll take you to a landing page that will then describe the three events that make up our February educational series. Session one we had last week, the January effect, which just showed how when you have a rough January, the tendency for the stock market is not to do well from February through the end of December. So you have a bad January, the correlation is pretty strong that you're not likely to have a great rest of the year. So that was the event last week, which, by the way, if you go over to this, you can check the recording. We do have a recording up, so you can listen to that event. The second session, though, is tomorrow. And that's the anatomy of a cyclical bear market. This is a really important presentation where I'm going to go back and show you what these cyclical bear markets look like in terms of duration, severity, and that sort of thing. So you want to check that out. You do need to be a member of Earnings Beats, but we have a free 30-day trial membership. So in order to be part of this tomorrow, all you have to do is go down here at the bottom, fill out the form. When your 30 days is up, before your 30 days is up, we will reach out to you to make sure you want to continue your membership. So don't worry about that. But this is going to be a great event. So I hope you'll consider coming in, joining us at Earnings Beats, and then check out the anatomy of a cyclical bear market. All right, let's talk about these five charts today. So the first chart that I have here is the consumer price index. And the point that I just want to make here is that as we add these monthly CPI calculations to the annual rate, you have to remember when you add the current month, which we just added January, which was released on Thursday morning, the January CPI came out in February, you have to get rid of the January of 2021. And you can see that was a flat month. And we added a month where we went up 0.6%. So that we saw another spike in the annual rate of the core consumer price index above 6%. We continue to rise. The main thing I want to point out here is the next 2 months, the February and March reports that will come out in March and April will be replacing the February report where we were pretty flat and the March report where we just went up a little bit. So this annual rate is almost guaranteed to continue climbing. And that you're going to see it all over the news. The media is going to be all over it. It's going to continue to put pressure on U.S. equities, in my opinion. In particular, be careful with the growth stocks. This is the large cap growth versus large cap value. And you can see as this keeps going up, we're starting to roll back over again here. Same thing with the mid cap growth versus mid cap value, small cap growth versus small cap value. And then here at the very end, you can see the S&P 500, which pushed to a final all-time high to begin 2022. It occurred with money rotating in the consumer space away from consumer discretionary. I think all of that's really, really important. So I just wanted to pull this chart up and just let you know, as this comes out the next couple of months, we're going to continue to see inflation rise. And that, in my opinion, is going to really keep a lid on the stock market in the near term, because as inflation goes up, the Fed's main vehicle to fight inflation is to raise rates. And so higher rates, higher inflation both hurt growth stocks, and that's going to be a problem. The second chart I wanted to point out here is this goes back, just to take a look a little bit at a cyclical bear market during a secular bull market. That's really important. I'm just pointing out the 1960s. We had very low rates. We had very low inflation, but that started to pick up in the 1960s. As you went through the 60s, the inflation started to pick up. And you can see while we were in a secular bull market, we had periods here where we took some pretty big drops, almost 30% in the first 6 months of 1962. And I think that was the Kennedy flash crash. And then 1966, you can see we moved down 24%. And then late 69, actually late 68 into 69, you can see all three of these cyclical bear markets, short-term in duration, all occurred within the long-term movement to the upside. So that's what cyclical bear markets within a secular bull market look like. So keep this in mind. Again, I'll be talking a lot more about this on Saturday morning at our Anatomy of a Cyclical Bear Market event. Third chart I want to show you here is the S&P 500. This is a 10-minute chart that goes back 1 month. So this gives us a lot of the weakness that we saw back in the earlier part of January and then into the latter part of January until really we put that bottom in on January 24th. The volatility index, by the way, at that point hit 39, which is just crazy, extremely volatile. That normally marks bottoms, and it did so again. And that's what gave us a little bit of a thrust back to the upside on the S&P 500. Since then, we've been going sideways. The thing I wanted to just point out to you and make you very aware of is that when you go into these downtrends, usually the afternoons are rough. So if you get morning strength, which you go back, if you look, you'll see several days where we see morning strength, usually followed by afternoon weakness. So don't chase these rallies in the morning. If you believe, like I do, we're in a cyclical bear market and that we're eventually going lower, please be careful in the afternoon. On Thursday, when we got the CPI report out, we gapped down with the CPI report, but then we turned around. The S&P 500 actually made it into positive territory in the morning. It was a head fake. Look at all of that selling. This morning, we were up early, and now we're starting to roll back over again. Be very careful in a downtrending cyclical bear market. Be very careful about these morning rallies. You really want to see afternoon strength to at least give you some sense that maybe we're reversing. So just keep an eye on that. Then let's move on to the next chart. The next chart here, again, the S&P 500, but this is from a longer term perspective. I see a head and shoulder top. And with everything else going on in the market, I believe we're going to break this neckline. But the left shoulder formed early September. We went down, put in that initial low in early October, went all the way back up, put the final head in late December, early January, came all the way back down, had a false breakdown, but we did put in a lower low intraday before we rallied back. Now we've got the right shoulder up near the 50-day moving average. I believe we're rolling back over. I think we're heading back to 4,300. And if we break 4,300, which I believe we're going to, that measures down to 3,800. I think we're going to get to 3,800 eventually, maybe even lower than that over time. So be very careful with all the different signs that are setting up here in the market right now. The last chart I'll show you here is a little intermarket relationship that I like to follow. Again, the S&P 500, here's your daily chart here at the top. But I drew this red dotted vertical line here back on November 19th or so. And it was right about the time that consumer stocks switched from the more aggressive consumer discretionary to the more defensive consumer staples. So as we were going higher, I look at the XLY XLP as a sustainability ratio. In other words, when the market's going higher and this ratio is going higher, I feel pretty good about the action. But when the market goes higher and this starts to go the other direction, I think you've got to be very careful. And at the end of December, early January, you can see we made a new high, but look what was going on under the surface within consumer stocks. Money was rotating very quickly away from consumer discretionary into consumer staples. If you look down here at the bottom, this is the more growth-oriented NASDAQ versus the more value-oriented S&P 500. S&P 500 has lots of growth companies, don't get me wrong, but it's more value-oriented than the NASDAQ. The NASDAQ has more weighting towards growth stocks. So when you start seeing from this November high into the latter part of December, early January, you can see how that money was rotating away from growth and into more value-oriented stocks. That is never a good sign. And now we're starting to see it in the S&P 500. I believe we're going lower. I think we're going to see a break below 4,300 in time. I don't know if it's going to be short term, like this week or next week, but I do think eventually we're going to break that 4,300, go to 3,800, and even possibly lower than that. But I'm going to talk more about that on Saturday. So again, I just want to point out to you, please go over to earningsbeats.com. Check this out. You can already go back and look at the recording of session 1 that was open to the public session. Session 2 and 3 is for our members only. I think these are going to be very, very important to know going into the bear market that I think we have already begun. So anyhow, make sure you check that out. We'd love to have you for the Saturday event. It was so much fun, such a pleasure joining you today for your Daily 5. Please, again, remember, go to earningsbeats.com, sign up for our free 30-day trial membership. That'll get you a seat to Saturday's The Anatomy of a Cyclical Bear Market event. I hope to see you on Saturday. Hey, happy trading, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.